And it'll take about a minute or so to let people into the room. So thank you for your patience as we do so. Want to welcome you to the Digital Trade and Data Governance Hub. I think this is our 21st webinar of the year. So many. But we are glad to welcome you. And I just want to remind you before I introduce our moderator, Barbara Kotschwar, that there will be a couple more this month. We will have 3 coming up, 2 with The Economist on the Splinternet, digital trade, and then 1 on the microeconomics of data on the 29th. So with no further ado, I'm very honored to introduce Barbara Kotschwar, who is the Executive Director of the Visa Empowerment Institute. Barbara.
Great. Thank you so much, Susan. And it's such a pleasure to be here and an honor to be here with this amazing panel. And it's kind of exciting that Susan mentioned this is your 21st seminar, which is kind of appropriate because 21 connotes a certain amount of maturity. And I think this topic is gaining a certain amount of maturity, both in terms of what's written there and in terms of the issues that policymakers are confronting. I think we all know that data-driven innovation is a key pillar in the 21st century as a source of growth, and many of our panelists have written and spoken about that. Particularly in the financial sector, data-driven innovations have the potential to provide for a more efficient allocation of resources, and thereby a higher level of capital productivity and economic growth. And they also have real opportunities for enhancing financial inclusion. But there are also some downside risks that many of the panelists have also talked about, of using what some have called big data coupled with financial innovations. And so policymakers and business leaders alike are looking for ways to ensure and to spur financial innovation while encouraging responsible data use, promoting the security and reliability of the system, and making sure that populations are safely able to take advantage of these innovations. So today we have a terrific panel to help us puzzle through some of these key issues. And we'll start with Linda. Linda, you have spent quite some time working on these issues at the international level, also at the domestic level. You've worked at the Fed, you've worked at the Financial Stability Board, and you now have literally written the book on open banking. I think everybody has heard about open banking. Maybe not everybody understands what we mean and why we should care about open banking. Could you give us a brief definition and then also talk about how this concept affects financial innovation, and share any thoughts you might have on the need for data governance and how that could best be done in light of these developments?
Thanks, Barbara. Definitely very happy to expound on this topic that I feel like we really need to increase awareness, because open banking is something that we do every day as Americans, but don't know it. But before I jump into that, I also want to thank Susan for inviting me to join this fantastic panel today, and really excited to share and exchange views. So when I led the Basel Committee study on open banking, we found that there was no official definition, and that open banking comes in many flavors. And so, as with different flavors of ice cream, I have a 3-year-old, and I feel like I live with lots of ice cream every night. And there are different flavors as well in open banking. However, all these different flavors of open banking share common components. So I would say that the probably the most inclusive definition would be, open banking is the sharing of customer permission data by banks with third parties. And those third parties are usually fintechs. And this sharing is done for the purposes of providing a financial service or product. So the flavors can vary, and I'm talking about the different open banking models across the globe. Some countries have requirements where they mandate the sharing of data, and usually the requirements are promulgated by competition and antitrust authorities, not bank regulators. So, the thoughts there is that open banking would improve competition and also help bring in fintechs to compete with banks. And then in other countries, it's not mandatory, such as in the US, although some may argue that Dodd-Frank Section 1033 does provide such legal authority. And then flavors can also vary as to what kinds of consumer data must be shared. So in the EU, banks must share payments-related data with authorized third parties. And then in other countries like Australia, the plan is to require data sharing not just by the banking sector, but also by the energy and telecom sectors. And the goal in Australia is to eventually create an open data economy across all business sectors. So, why are jurisdictions around the world passing rules around data sharing of consumers' financial data? The reason is that governments are beginning to see that if they encourage the growth of data, the sharing of data, that can lead to the growth of their economies in ways that are still unknown to us, but we are already seeing a lot of innovations today. And for example, India and Australia have already announced that they explicitly are aiming to transform their economies into data economies. And they see open banking as a way to create and support new digital ecosystems. So this data sharing provides, yes, please go ahead.
No, sorry. I don't mean to interrupt, Linda, but first of all, I love the ice cream analogy. And I think we're all probably now getting a little hungry for more data as well as for ice cream. But you mentioned the different approaches that governments have been taking in order to maximize on this data for economic growth. I thought we'd turn to Ravi. Ravi, you've done a tremendous amount of work looking at best policies and conditions for doing digital business. And a lot of the work that you've done has really brought the digital into economics. You've promoted sort of the digital business index. You're looking at sort of a gross data product. So we'd love to hear from you what you think governments should be thinking about as they aim to meet these sometimes contradictory goals, financial innovation on the one hand and security and stability on the other. And can you give some examples of countries that you think have done a good job of balancing this?
Thank you, Barbara, and delighted to be here today. Thanks to you, Susan, and Digital Trade and Data Governance Hub for having me here today. So financial innovations, right? The way we see financial innovations is as a means to an end and not an end in and of itself. They are enablers, force multipliers, if you will, of several kinds of innovations. And Linda spoke to that a little while ago. I like thinking of financial innovations as the rails for global trade flows. So I'll take a quick example from the past to talk about the future. So if you were to consider the Panama Canal, and that's what I was thinking about this morning as I was collecting my thoughts for today's conversation. One of the world's 4 biggest shipping routes accounts for about 5% of the world trade, roughly about 14,000 transits that happened last year alone. Its construction circa 1904 and its subsequent operations a decade later, a huge gamble in every sense of the word, were made possible by financial innovations of that era, by the likes of Citi in maritime transportation financing. And at that point in time, it was seen as a massive gamble. So in a similar way, digital financial innovations, I would submit, are the rails and enablers for all kinds of digital businesses and platforms and innovations, several of which the world is yet to see, as Linda alluded to a little while ago. So now let me allow me to answer your question slightly differently. I'll start with countries that have been doing it badly and back into countries that do it right. Here's our thesis. How a country governs its banking and financial services ecosystem says a lot about how it is poised to govern its data and digital economy. Cross-border payments, if you will, are the proto-data economy, long before digital economy as we know it came into existence. So if it is harder, for example, for a multinational bank to open branches and expand services within the borders of a country compared to their local peers and competitors, you can assume that it would be as difficult for digital businesses and platforms to enter, operate, and thrive in those markets as well. I'll take an example from my own sort of experiences. I know Linda said India Linda put India in very positive light, talking about open banking, but I'll take the example of India about 20 years ago. This was back when I ran payments, the payments portfolio for a multinational bank, Standard Chartered, 2001 to 2005. There were several restrictions on the growth and expansion of MNC banks, which often came at the cost of greater financial inclusion. We wanted to implement all kinds of financial inclusion initiatives, but MNC banks were prohibited from entering some of those areas. A decade and a half later, you see the Indian government adopting similar protectionist and pro-domestic player stances, if you will, in e-commerce. Amazon and Walmart, for example, face significant barriers compared to their domestic, competitors such as JioMart or what have you. So there is, goes back to the point that I was trying to make a little while ago about how, a country governs its banking and financial services ecosystem says a lot about how it is poised to govern its digital and data economy. Now, you mentioned our ease of doing digital business scorecard. We did observe in that report, by the way, that data accessibility and mobility of data across borders is central to the sustained growth and innovation among digital businesses. Now, several countries have restrictions on data flows or all kinds of onerous data localization laws. Such laws, as we observed, have the effect of imposing a regressive tax on digital businesses. They raise the costs of entry and of doing digital business, especially for startups and SMEs. They encourage rent-seeking behavior among established domestic actors and reduce competition. And what's worse is that they hurt the digital competitiveness of the country in question. Again, something that Linda alluded to a little while ago. Now, policymakers keen to foster robust and competitive digital economies would do well to measure and monitor, and as you mentioned, our gross data product work, their gross data product, or as we call it, the new GDP, and eliminate barriers to accessibility of data and work towards shared norms for cross-border data flows. We also observed in our more recent Digital Intelligence Index report that more data privacy protections, and less data protectionism is the mantra for digitally competitive economies. Open data flow policies that lower the barriers for digital businesses, combined with strong privacy protections and security environment, encourage greater digital activity, and all kinds of financial and digital innovations. And these are, the key building blocks for competitive and innovative digital economies. Now, I'll answer your question about countries that have been doing it well, and these are countries that have a high level of what we observe as institutional openness to data flows. So some that come to mind are the self-selected Digital Nations Club, the D10 countries, EU, US, UK, and Japan are primarily, high up on, in our list of countries that have a higher institutional openness to data flows.
So that's super interesting, and I think has a lot of impact for folks on this call. The impacts that you're talking about are not only at the national level, but as you say, affect the ability of small businesses to take advantage of global value chains. For example, I think the World Bank in their 2019 or 2020 World Development Report also talked about the impact on productivity gains, and that's certainly something that needs to be thought about. I'd also like to move to the kind of really micro level. Sultan, congratulations on being the first Chief Innovation Officer at the FDIC. I think that speaks volumes both for your own expertise and competence, and also the recognition of the importance of digital innovations in the financial world. You've obviously put a great deal of thought into how artificial intelligence and big data can help financial inclusion. And you've actually said that the vectors of success for dealing with the unbanked are going to be digital in nature. We'd love to hear more about that. And if you could help us think about how institutions that are aiming to help serve underserved customers should navigate this space. And also how the pandemic may have shaped your thinking about this.
It's a great big question, Barbara. Thank you for asking it. I get to kind of riff on this, which is fantastic. And also thanks for having me to this great event. I am impressed that you guys are able to do so many of these and have such a longevity to them. It's definitely shows that this is one of these much watch events. And so I am the new Chief Innovation Officer. Although new, I don't know if I say new anymore. It's been 4 or 5 months at this point. Although in government, tenure is measured in occasionally longer orders of magnitude, decades or something. I'm not quite there yet. But a couple of things. One is we've seen tremendous technical innovation in the financial services sector for the last few decades, and one of the most interesting side effects of that is that the vectors of humans interfacing with the financial services sector has broadened tremendously. It used to be you would walk into an office and have a one-on-one discussion with someone, right? That's still there. There's still value for that, especially in the more community banking functions or in niche financial services products. But now a tremendous amount of what we do is governed by this little, $1,000 mini computer we all keep in our pockets and the internet that sits behind that. The pandemic has been, beyond a global tragedy, a great accelerator of change in certain subsets of the financial services market, banking in particular. Banking historically has been one of the laggards amongst various markets in terms of their adoptions of new technologies. You'll see a lot of banking systems that are older than our kids or our cars, or in many cases, we were in college when they were written. And so you have that on one side, but then you have tremendous innovations, especially within the fintech ecosystem and in areas like artificial intelligence. But because of this spread now, we have this really serious concern that we could be in a situation where there are digital haves and digital have-nots, and that have-nots that exist outside of the digital sector become even more disenfranchised over time because of that lack of digital access. And so there's this huge worry that I and a lot of others, and I know Linda and I have actually spent a lot of time talking about this, really worrying about the fact that we might be institutionalizing this gap in the market. And so that's kind of one comment I'd make. The second comment is that the pandemic has been an incredible accelerator of change in that market, so that people are moving more and more away from in-person activities in financial services. And we've seen, especially here in the United States, a tremendous swing in the use of branches, for example, versus mobile banking applications. And so that's been a huge evolution. Now, will people, as we come out of this part of the pandemic, and we get more people vaccinated, et cetera, will they be able to go back into the branch, and will people start to do that again? Yeah, absolutely. But will it go back to the way it was? It's not likely. I think we're going to see some back, but an increased investment and increased activity in that space. Then you add in things like digital assets and some of the other newer financial services products entering the market, which are only available digitally. And there is this, kind of multi-vectored change happening. I spend a lot of time thinking about what I call the last mile problem. You can have all the amazing technology in the world. You can have all the great financial services products. You can have an innovative regulatory system, which is one of the things I'm trying to work on, which not necessarily has always been true. But then at the end of that, you still have to get it in the hand of the average person. You have to get that service or product in their hand and get them to a point where they can use it and it can have the value and they can be a full member of the banking universe, especially banking, because that's the universe I live in currently. And there is just so much opportunity there. It's incredible. Here in the United States, it's low 90% of households have bank accounts, but you go into very specific populations and that number is significantly lower. So there's a lot of work for us to do there. And the ways we change that, there are a lot of things we're doing. We're looking at different new ways where the public sector and the private sector can work together to find ways to close that gap. We're looking for ways where we can encourage through the different regulatory bodies, activities that get people towards that. And if people are interested in something that's had tremendous success so far, I'd ask you to look at the Get Banked initiative from us at FDIC. That's an absolutely fantastic program. We have a variety of different engagements like that. We have a fantastic diversity and inclusion program going on. You'll hear a lot more from us about it. In fact, you might hear more from us about it next week. So I can only tease it like that, but I can't say too much else. But it is a massive area. And let me take a little tangent and talk about the value of artificial intelligence here. Artificial intelligence is a key differentiator. And I think if you take digital activity as a way of changing the vector of inclusion and you add artificial intelligence to that, you now have real opportunities to make structural and strategic changes to the access that everyone has to high quality financial services. And so if a banker or a regulator or a policymaker is listening to this, I would just encourage them more and more to look at digital technologies and artificial intelligence as ways of fundamentally altering this gap in inclusion that we all see.
That's great. And thank you for that teaser. So everybody, you heard it here first. Check the FDIC website and Sultan's Twitter feed for more next week. Very exciting. I think, you bring up so many really important points, and the possibility of using technology, using artificial intelligence as a game changer and as a force for good. There are many different ways of thinking about this. And I know that, I'll turn to Brad, who, if anybody can represent kind of cutting edge industry thinking on this, it is Brad Carr from the Institute of International Finance. I know that you have just come out with a data ethics charter, and would love to hear a little bit more about that and what your current thinking is from kind of the private sector side on these issues.
Sure. Well, thanks, Barbara, and thank you for the very kind words. And indeed, the Data Ethics Charter has been a really important piece for us that I think has become even more critical in the pandemic environment. I think to Sultan's point, the pandemic has accelerated and accentuated a lot of the trends that were already happening. It has accelerated the process of digitalisation. And in doing so, it has increased the criticality of data in the economy. It has raised the bar in terms of customers' expectations, and what they expect from financial firms has been risen with their experiences in entertainment, in streaming, across other industries, all of which data is at the heart of enabling. So we actually had our board of directors, who are CEOs and chairs of banks and insurers around the world, direct us to take on this activity of developing the Data Ethics Charter. And they actually initially raised that just before the pandemic, but it's become more important, I think, through that process. I want to, for a moment, just call out a couple of really interesting data points that were published, firstly by the Bank of England in 2019, and secondly by the BIS about 2 weeks ago, and each of which showed where citizens, consumers, had been asked, who do you most trust with your personal data? And in the Bank of England study, it was overwhelming. 86% of people said their bank. The other 14 were scattered across a range of their social media company, their tech companies, their energy providers, etc., telcos. And the BIS study more recently, which was more reliant on US data, called out that people were more trusting their incumbent financial institution than they were the government with their data, and even more so than the likes of tech and social media firms. So as we're in this new environment, and I think there's a lot to be said about the platformization of the economy and the blurring of traditional lines. We've moved on from talking about the unbundling of financial services by small fintech startups. The story now is about the rebundling, particularly by the big tech platforms. How banks and insurers find their space in that world, I think the ability to protect customer data and to rely on that trust is really at the center of where banks and insurers can find their space. And so our principles-based charter is intended to articulate what are some of the things that financial institutions do well in this space. How have they built this record of trust? It does look at some of the applications across technologies like AI and machine learning that Sultan referred to. And we've done a number of surveys of firms of their adoptions of those technologies as well. But it's not exclusive to that. It's not specific to those technologies. And what I think we're trying to do really is bring sort of some of the high level principles to life. So if I think of probably the Monetary Authority of Singapore as being the foremost leader in the regulatory community on a lot of the digital topics, but particularly in this space, and they publish their FEAT principles, their principles to promote fairness, ethics, accountability, and transparency in the use of data. And they published that, I think, about 18 months or 2 years ago. I think that's been well received, but if there's one criticism, it's that it's a bit high level. And the way that the MAS themselves have explained it is intentionally so, because the intent is that the individual firms pick that up and elaborate and build their principles and their own operations and so forth around that. And so DBS Bank, who I think a lot would know, are widely regarded as one of the more successful and innovative banks. Their example about that was they developed their PURE framework for purpose, unsurprising, respectful, and explainable. That's their attempt to sort of bring that to life and actually embed that through the organisation in how they work. That it's not just about the intersection of the Chief Data Officer and the Chief Risk Officer and their responsibilities, but it actually goes a lot more widely through the organisation. And it's about having a culture that is conducive to bringing all of those different parties together. So that's kind of our context with the Data Ethics Charter. I won't dwell on it too much, but I will just call out the 5 main areas that it addresses. The responsible data management cycle. Secondly, data control. Thirdly, the challenges around algorithmic decision-making systems. Fourthly, partnerships and third parties. And lastly, skills, awareness, and knowledge sharing. And I want to just make perhaps 2 comments that tie into some of those themes. Around algorithmic decision-making, including artificial intelligence and machine learning. Governance, I think, is really at the centre of how we take these technologies forward. There is no singular way to ensure explainability of an algorithm. There is no singular way to ensure that we guard against bias in an algorithm. There are a lot of good techniques you can use for those things. And the technique you might want to use probably depends on what sort of data you've got, how you're actually going to use it, what type of algorithm it actually is that you're applying. And so we've often said in our dialogues with regulators, we don't want to straitjacket firms and say you have to use this technology and this technique in all cases. What it probably should be is that there might be 10 good techniques for ensuring explainability, 10 good techniques for how we guard against model bias. And you should have the sophistication and a framework for how you select the right one, depending on what you're doing. And so we don't so much want to be straitjacketing with a hardline regulatory approach, but we need to ensure we have the governance and we need to ensure that the supervisors are scrutinising the firms to ensure that they have the controls and the sophistication in what they're dealing with, that they've got access to the right techniques and that they've got the smarts and the ability to be picking the right one. The other point I wanted to make was about this element of the partnerships and third parties. And increasingly, it's not just about what you do in your house, in how you use data, it's about the third parties that you work with. And if I can extrapolate that a little bit further and talk about the wider, I mentioned earlier, the tech platforms, the platformization of consumer finance. I think increasingly consumer finance is going to be done on platforms and firms are trying to find their space. Do you want to build and be the platform yourself, which is a strategy that Santander and Itaú and Erste, for instance, have been aggressive in pursuing? Or do you want to be a product provider on another platform, selling your product on Amazon platform or the Alibaba platform or whatever it might be? And I think there's this challenge and strategic issue for a lot of firms at the moment in trying to find their niche and trying to find their strategy, trying to find their place in how they interact with all of that. And it also comes back to what I was saying earlier about if you've got a trusted position, a trusted reputation in how you use data, and if that is a really central differentiator for your business, how do you fit that? How do you make that work in an environment where you are increasingly going to be working with those third parties? So I'll conclude my comment here, Barbara, because I know that this is such a multifaceted discussion and there's so much more to move on to, but I'll conclude this just by bringing up a quote from Candido Bruscia, who was, until the end of last year, the CEO of Itaú and a member of our board of directors. And he talked about how their strategy has been that they want to focus on the customer, on the distribution angle more so than the product. So they are building their own platform and they are inviting other banks, insurers, fintechs to sell on the Itaú platform to Itaú customers. And his observation was that had just thrown up so many new questions and challenges for them in terms of the skills to deal with third parties, that they've had to develop those skills in-house, acquire them from elsewhere or whatever it might be, but that this is really at the fundamental issue of how you actually embed and operationalize this in finding your space in the innovative financial world.
No, that's great. And that, absolutely is something that consumes all of us in this knowledge and digital economy. I think you've done such a great job of elaborating these principles and how it affects the way business is thinking about this. And gosh, what a great panel. I think I have about 20 questions for each of you that could lead to 20 more and 20 more, but Susan has made me promise not to do that. I would like to ask a last question of all of you. I'll start with Brad, and then we'll go to the question and answer session, which I think will probably be the most fun part of all of this. So, start submitting your questions, please, those of you who have them. But given all of these considerations, I mean, we've talked about, the different ways that countries are approaching the issue of open banking and open data. We've talked about the need for security and resilience, and we've talked about private sector considerations. We've talked about financial inclusion considerations. I'll pick on you, Brad, because when we moving to the next level, and that's, how do we look at this in an international regime? We are at George Washington University, sitting in the middle of DC, and so we have to think about the international implications. So you mentioned you had a wonderful panel and podcast in which your panel brought about the idea of a digital Bretton Woods. Right. And right now, there isn't a real international regime for data governance. And certainly not one that would lead to financial innovation and capture all of these benefits and mitigate the negative effects that Ravi has talked about. What do you mean by a digital Bretton Woods? What would that look like? And so I'll ask you, and then I'd like to turn to the other participants and get their views as well.
Probably a bit in the eye of the beholder, and there's probably different views on it in the same ways that there are different things of the old Bretton Woods that people would focus on. And to some people, it's about the gold standard and the establishment of the major institutions that are here in DC. I think we're talking more about the rules of the game for international trade. And certainly when the MAS's Managing Director, Ravi Menon, really put this on our radar in our October 2020 annual meeting, we're talking about the rules of the game for international trade, that the GATT and later the WTO established that for physical goods. We have not had the same for digital trade. And in Ravi Menon's words, that a lot of the tech tensions we see in the world have probably emerged from the absence of those rules of the game. I think it's actually sort of in two areas. And one is about trade rules and whether or not we need to do something at that level, ideally multilaterally, but I appreciate that's difficult in the current environment. Try to build on some of what the Osaka track of the 2019 G20 talked about with the notion of the free flow of data with trust that Prime Minister Abe championed at that time. But alongside that piece in trade, and Singapore, again, I think have been the leader. They've done their bilateral digital economy agreements with Australia and New Zealand and Chile. They were at the forefront of the memorandum of understanding they did with the US Treasury a bit over a year ago. But as well as the trade piece, I think there's also questions around how we do the international cooperation in a regulatory sense, because some of the data localization issues we see that Ravi talked about, some of it is regulatory requirements to keep things close by, keep them in-house, impressions of that things are insecure if they naturally go across borders, requirements for local copies, which I think just creates additional points of vulnerability in the system. And so, I think we do need to look at, what is the international regulatory framework, not only for data, but also for a lot of these other broader digital trade issues. Do we need something like the FSB? And I guess the complication is that we used to have very simple regulatory mandates for a banking supervisor, insurance supervisor, security supervisor. Firstly, those lines are all blurred, but then you've got to overlay the privacy commissioner, the competition commissioner, the data commissioner. So you end up with this very complex labyrinth of regulatory mandates in every country. And they all solve those things differently, and it gets even harder when you get up to the international level. So I don't in any way want to understate the magnitude of the problem or the challenges that the regulatory community are dealing with. And I want to also stress that this is broader than financial services. So it goes beyond the remit of somebody like the FSB. But I think the FSB has a really crucial role to play here, because financial regulators have actually probably done a better job than any other regulator in terms of international cooperation, international coordination. Their record through the last crisis and ever since, I think, is very, very good. So I think the FSB has a really crucial role in being able to champion the cause to the G20, and that hopefully we can, develop some greater areas of commonality. I do want to stress I'm not naive, and I don't think we're going to suddenly have a great international standard for data that's going to be common everywhere. We've got very different cultural values in a lot of places, very different emphases in places like the European Union's human rights interpretation. But what we need to focus on is achieving the lowest common denominator that we need for things to flow and for things to be safe, that we need for countries around the world to be able to use the best security technology, which generally comes from AWS and Microsoft and Google Cloud. We need to get to that minimum, and that means we really need to focus on interoperability. And the APEC Financial Forum, I think, has done a lot of work leading the way here in achieving or articulating what interoperability, what those minimums would look like across Asia-Pacific jurisdictions. And Barbara, I noticed you and your colleagues at the Visa Economic Empowerment Institute published a piece on trying to interrogate what does interoperability actually mean this week. I think this is, realistically the best way we have forward to try and ease some of these tensions and ease some of the flow, so that we can avoid the localization costs that our Ravi was talking about earlier.
Great. Well, thank you. And thanks for the plug for our paper. It's something, interoperability is something that we think a lot about at the Visa Institute. Sultan, you're the only one of us right now currently in government. Any thoughts?
This is where I pull out my standard, these are my views and not the views of the US government, any houseplants I might have or anything else, right? Actually, I love it when Brad talks about a digital Bretton Woods, because I'm a member of Bretton Woods. And so it's wonderful to hear the relevance there. And I started off by talking about the need for a digital Marshall Plan when I was talking about domestic activities. And now I'm going to adopt Brad's, a digital Bretton Woods, and he and I'll figure out how to brand that the right way between our respective organizations. But Brad highlights this problem very well. We have a federated system, right? It is not a hyper-centralized system, no matter how much certain political entities might want there to be a hyper-centralized singular system. And so in the federated environment, we have to find common ways of operating, right? And if, one place that I think a lot of people could spend more time on is looking just at standards. Right, just standards. That's a great starting point. Whether it's data operability, metadata, KYC, a variety of things that are common purpose. Even in places where certain political entities haven't necessarily gotten along in a lot of ways, and I'll highlight one, actually two great examples. The one is actually goes back to the founding of the internet. There was a huge amount of public-private partnership around standards for the internet, and that led to a lot of the discussions we're having today. So things like the WC3 got created out of the need to create standardized data movement structures on top of the web, right? The other one is spam. We all live with the hatred of spam email on a daily basis, and there have been tremendous amounts of work across a wide number of nation states, private sector companies, and everyone in between to mitigate that. And I know, at least from my perspective, if I think about spam 5, 6, 7 years ago and I look at it today, it's certainly a lot better. And that's because we have places where there's tactical cooperation. And so we have really, I think, two vectors of activity going on. One are the very, very large macro trends that Brad, I think, did a really good job highlighting. And I'm just as much a fan of the Monetary Authority of Singapore as he is. I think they've done some amazing work. But then we also have to find, very tactical, very specific ways of doing things and find ways to break down traditional silos. A great example that I would highlight recently is here in the United States, we have the National Security Symposium on Artificial Intelligence, Commission on Artificial Intelligence, which is kind of just wrapping up their work, and they had their final report here not too long ago. Some amazing stuff about artificial intelligence and data came out of that, but that has broad applicability far beyond traditional national security dialogues. And if I was on board of a bank or a large financial services entity or C-suite, I would be looking at that report and looking at how that applies to things like artificial intelligence, like data, like interoperability, like trust, et cetera. And so the only point I would leave with this discussion is, I think in government circles, we have historically been very siloed. and there are a lot of ways where those traditional silos are breaking down. And it's because of all of this change, and the technical requirements of our leadership are skyrocketing, right? A friend of mine made the case that every senior leader at a regulator needs their Mr. Spock from Star Trek, which I like that, but I would actually prefer to have Mr. Spock actually, the leader, right? And so we want that technical acumen inside of the leadership. And so for me, I hope that people listening to this get inspired by the discussion we're having, but then also use this as an opportunity to get people with these great skill sets into the sector.
Absolutely. I think that's many of us would second that as well. And it's great to hear you say that. Let's move to Ravi for some final thoughts on this, and then to Linda. But I also wanted to call out a question in the chat. Sherry Stevenson, who I know has done a lot of thinking about this, is asking, is there a problem of ensuring interoperability of data exchange for personal financial data? And how are financial institutions dealing with this? And I think this links also to the broader discussion on interoperability. So keep that in mind as you're making your comments. So Ravi.
Absolutely. Barbara, thanks. First off, I kind of want to acknowledge what Brad said a little while ago when you asked me the question about which countries are doing it well. How did I miss Singapore? Singapore is obviously, so further ahead. It almost is the benchmark for every other country to follow. So I wanted to acknowledge that when you asked the earlier question. Now, speaking to the digital Bretton Woods, the one sort of, if there is one mantra, as the academic at the table, I can take the liberty of contributing to such a charter, and it also speaks to the question on AI that you asked. More data privacy protections and less data protectionism. And I know it sounds a little glib, but the more you think about it, it absolutely makes sense. More consumer data privacy protections and less data protectionism. It's the interaction between what the state ought to do and what we, and where the boundaries of, what the rights of the citizens ought to be and what the responsibilities of the state ought to be in making sure that we have, a well-governed digital economy.
And I think, that makes a lot of sense. And I think sometimes the protectionist measures are trying to go towards protection. And as you point out, don't always achieve that objective. But Linda, I know you've spent quite a lot of time thinking about all of these issues, and you're no longer in government, so you're freer than ever to talk about it. So we look forward to seeing you.
Yeah, Sultan, you should channel, text me right now and I'll just say it. There are so many things that could be said right now, but since I get the privilege of going last, I would like to stress that, I would like to bring it actually home to the US. The digital Bretton Woods idea, that is fantastic. I actually teach Bretton Woods in my class at Georgetown Law. So it's really like to think, it continues to evolve, right? And, but what would that mean for the US? I think it's really important that we have a digital infrastructure plan. Like Biden administration right now is pushing an infrastructure plan, but they're not actually, what would be nice would be thinking about how to encourage the growth and of a robust and resilient data economy, because we are already a data economy, but we don't have the data economy that is supported by the foundational components that Ravi was mentioning earlier. So what do I mean by a digital infrastructure plan? I mean that it needs to have modernized regulations that can protect the consumer. And I'll get to that in a bit. And more importantly, we need to also have consumer data rights framework as part of that digital infrastructure plan. We're talking about Singapore earlier. Singapore has personal data rights. Singaporeans have the right to port their data. We don't have that right here in the US. Some would argue that 1033 gives that right to American consumers, but it is actually not that clear cut. And I would argue that it is not explicitly stated in 1033. What kind of data can be shared? Americans should know. Unfortunately, when I download apps on my phone, I just click agree. And I read the agreements, but more because as an academic, but I think most Americans don't read the user and privacy agreements because they just want to use the service. But we then unknowingly agree to the sharing of data that we might not be comfortable with, or perhaps we would be if we just actually knew. So improving informed consent disclosures. So, Americans would know what we're actually agreeing to when we use these services, and then knowing how our data is shared onwards with third parties, fourth parties, fifth parties, and then getting to control who we want to share our data with and what data we want to share with and for how long. These are really important personal data rights that should be enshrined. And I hope there are people who work on the Hill listening now, because I think this will actually help facilitate the growth of a stronger and more resilient data economy, because in the end, global competition is going to come down to who has the data. And what do I mean by that is who actually has access to that data will actually have the market advantage. So I'll stop there. Thank you.
So in the chat, we have one question, and that I think is to Susan, whether a recording of this event will be made available. And I believe that we are being recorded. So we can leave that till the end. But Linda, you bring up, such really wonderful issues. And, given that we're in the heart of DC and given who we have on the panel, I'd love to just hear your views on two main issues. One, what are all of the implications of these questions that countries and businesses are grappling with on kind of geostrategic issues, on geopolitics? The other is these tremendous innovations have led to such opportunities, but we're also seeing the digital divide potentially expand exponentially. What should responsible thinkers be promoting? What should countries be doing in order to mitigate that? And I'll pick on you first, since you're in the middle of my screen, and then would love to just have whoever else would like to weigh in on either of those.
Really great and very big questions. Yeah, I can go very big. I can also go very micro.
In 1.5 minutes, how about that?
Yeah. So, well, on the, I'm going to start micro. I think it's extremely important that we have broadband. It is shocking to me that I can go to parts of the US, and actually I'm on an island right now, off the Cape, and all I have to do is drive a few minutes away from my house and I immediately lose reception. And so if I need to make calls, I have to drive into town. If I'm not at my house, same in DC, I just have to drive out an hour into Virginia, and there will be pockets of just dead space. And so I think it's really important that we have broadband infrastructure. And I think this is part of the digital infrastructure plan that I think we need to seriously consider it and adopt. And then And then secondly, we, as mentioned earlier, we need that broad baseline of consumer protections. And so it's not just the personal data rights I was talking about earlier, it's also about consumer liability. Right now, Reg E protects us when we send electronic transfers from our bank accounts. So, if you make a mistake, you're only liable up to, $100. And, that's nice. You know, you're never going to be bankrupt for having sent a lot of money, right? And unfortunately, that is not necessarily always the case when you use a fintech application to send money or make a transaction. And we just need to modernize our consumer protections so they apply across the board. And I think once you build that kind of confidence in the data economy, then the data economy will keep growing. And so that's the macro side of these micro components that we need.
So I think that's so important. I mean, the trust and the confidence. And I know that Susan and the Innovation Lab have done a lot of work on trust across borders, across countries. And so I believe there's still a lot of work to be done. I think we could, put together and elaborate on these conversations. And Susan, I think there's a book in the making here, although I suspect that you're probably busy with a number of other projects. But Ravi, any final notes as we wind up the panel? We still have a couple of minutes.
Well, I guess I completely agree with what Linda said. Like charity begins at home. I think digital transformation begins at home. We've focused all of last year as we went into the lockdown. We took our measurement engines and pointed them straight at the United States, and we looked at on a series that we called the Uneven State of the Union, and it is shocking. For a country that has literally created the what is the global digital economy. For a country whose Section 230 is quite literally the basis for all kinds of platforms. It's shocking that our infrastructure is so pathetic. So there's a whole series of research that we've done for a whole year, going from infrastructural gaps, access gaps by race, by gender, by geography, by social class. These gaps, to Linda's point a little while ago, I think the estimates from the Biden administration were roughly, and for those of you on the Hill listening to this, were roughly about $80 billion. Our research says you need at least $240 billion. $240 billion, and I'll post the links to related work. We've mapped out in great detail which states need this help the most, and what parts by county need this help the most. It's shocking that the United States is so behind. Parts of the United States are worse than Sub-Saharan Africa when it comes to access to the to basic access to the internet. So Linda's absolutely right, and I'm happy to post those links to our work.
Perfect. I think this is a good lead to Sultan.
But again, I feel like I work for the Federal Reserve with all the disclaimers I'm going to have to put on the front end of anything I say. But, I think Linda and Ravi have done a great job highlighting the fact not only that we have tremendous gaps in access, but also that the measuring stick against that access is evolving. 50 years ago, it was, do you have access to the public school system? Now it is, do you have, home internet at reasonable speed, right? Or some degree of access. Copper in ground is always a questionable delivery mechanism. And that, we see some alternatives coming up. But at the end of the day, we are fundamentally a capitalist system. That capitalist system has to have the participation at as broad a population as possible. And what we were discovering is that structures that existed really well 30, 40, 50 years ago are not necessarily fit for purpose in the 21st century. Right. And so what that means is we are losing battles, but there are also battles we aren't even fighting. And we've got to figure out how to turn this into a discussion about how to enable this and how to close the gap as quickly as possible in as cost efficient way as possible. For all that, I embrace Ravi asking for another $240 billion from the US government. I don't necessarily ask for those kinds of numbers. I'm much more interested in things that are slightly more likely to pass Congress. And I would love us to get there. But then you have to think also about making sure that the products and services being offered across that infrastructure are fit for purpose relative to what the population needs today, and not what it needed 30 years ago, or not available 6 miles away and they've got to walk to a bank branch in order to get it. Right. And so for me, I'm much more interested in how the public sector and private sector can work together to close those last mile gaps in ways that increase access to every banking product and service available, and all the ones in the future for every American. Barbara, you're on mute.
Sorry about that. I was just saying, we now have some pretty complex questions in the chat. We have 3 minutes, but maybe we'll try to get some responses to this. One question is about the idea of consumer data rights. The questioner asks, the current market approach is that you either opt in or you're denied, Linda, what you were talking about, you're denied access to the product. They mentioned the opposition to any regulation by big tech, especially regarding data sharing practices. Given this, how would you approach the consumer rights framework? I think several of you have some thoughts on this. I will open it up to whoever wants to respond.
Maybe I'll add some thoughts that won't fully answer the question, but might help nudge it perhaps. Because I think it's really important that we have common obligations on all firms participating in the economy. And the concern I have with open banking and the way that it's been framed in some parts of the world is it puts an obligation on banks and not on anybody else. And I'm more encouraged by the scenarios we've seen underway in Singapore, and that Linda foreshadowed that Australia is ultimately aiming to get to. I think it's a concern where I can tell my bank, go and share my data with Google, but I can't tell Google, go and share my data with my bank. And if you look at there's some great work done by a team of academics led by Manju Puri at Duke, who I think is also a fellow at the FDIC, that looked at, how do you do credit scoring based on different data sets, and do credit scoring on the basis of traditional metrics, income, repayments, your repayment history, your expenses, your assets, or do it on your digital footprint. What time you log on, what operating system you use, whether you type in all capitals, whether your email address is a work email or a Gmail. And what their analysis found was that using the digital footprint was slightly more accurate than using the traditional credit metrics. But you got a quantum leap uplift in accuracy when you put those two together. And we have, in the form of many countries' open banking regimes, something that gives a unique position to the tech firms that only they can ever do that. Now, I would argue we should have an open system that if you want to be able to receive consumer data where directed, you should also be able to provide it when the consumer directs you. The consumer should always be the one empowered. Consumers should always make the call, but every firm that wants to participate needs to be able to both give and take when directed by the consumer. Now, it may well be in that example I've given in the analysis that Manju Puri and team have done, it may well be that a lot of banks don't have the analytical capacity to ever be able to do what a Google or an Amazon or whatever might be. But I think that's a question for business strategy and business investment. We shouldn't be legislating that only some firms get that opportunity and that others don't. So that's my view, that hopefully adds something to that discussion.
Well, I think that's a good place to end, although it opens up a lot of questions. There was one remaining question in the chat about the participation of developing countries, particularly given the large cost of meeting some of the ESG targets, that I think I'll circulate to the participants afterwards, and perhaps we can answer it through a chat, or we'll send it to you, Susan and Thomas. This session has been recorded. It will be available on the YouTube channel. We have shared a number of links through this chat. We hope this has been helpful. Thank you so much to the panelists, to Linda, Sultan, Ravi, and Brad. I think it's been tremendous. And thank you so much, Susan, for organizing this and putting together, these wonderful panel and asking such big questions for consideration. I suspect that you can get several panels out of any of these issues. So thank you very much. And I hope everyone has a
Thank you, Barbara, for such excellent moderation. And I would like to ask that we do a second version of this if all the participants are okay with it. Because I do feel like we didn't have enough time to answer a lot of your excellent questions that you prepared in advance. And you guys are very clear speakers. So let me thank you again, and I'll get with you to arrange another one. And thank you to our audience. Have a great day, everybody. Bye.